When tracking a stable economy, we expect a consistent trend line. But macroeconomic data sometimes breaks that expectation, producing abrupt spikes that distort the ledger. This is a bar chart tracking real GDP growth contributions in Switzerland. Between 2014 and 2016, a single subsector began driving massive swings in the national data. In 2014, this sector added 0.1% to the nation's total growth. The very next year, it dropped to negative 0.2%. Then, in 2016, it surged again, driving 0.3%. These sharp fluctuations are not structural economic shifts. They are statistical outliers caused by the specific mechanics of global sports mega-events. The source of this volatility traces back to the 45 international sports organizations headquartered in Switzerland. The most economically significant of these entities are the International Olympic Committee, UEFA, and FIFA. These organizations operate on strict 4-year financial cycles. For 3 years, they focus on preparation and investment, culminating in a single massive tournament. When that event takes place, it generates billions of dollars in revenue in mere weeks, all of which flows directly into the Swiss accounting ecosystem. This creates a challenge for macroeconomists. National statisticians must find a way to fit these unique, cyclical flows into the rigid frameworks used to track the rest of the country's economy. Because these nonprofits operate on concentrated event cycles, their revenue recognition alters Swiss macroeconomic indicators, making it difficult to see the underlying domestic economic situation. Track this distortion by analyzing the gross value added for the sports and recreation branch. The revised trendline becomes a series of sharp peaks. Each corresponds to an even year cycle: the 2014 Winter Olympics and World Cup, the 2016 Euros, and the 2018 World Cup. This happens because FIFA generates the vast majority of its cycle revenue from its flagship tournament. During the 2015 to 2018 cycle, 83% of FIFA's total revenue was generated by the 2018 World Cup alone. These peaks were further sharpened by a change in accounting standards. In 2016, FIFA adopted IFRS 15. IFRS 15 requires that revenue from customer contracts be recognized only in the exact year the event occurs. Previously, these organizations could smooth their revenue proportionately over the entire 4-year preparation period. This collision between global corporate accounting standards and the mega event model creates a massive single-year economic expansion on paper. To understand why these peaks are so large, we have to look at how Swiss national accounts categorize the money flowing into the country. Most of this capital comes from the sale of global broadcasting and marketing rights to territories across Asia and the Americas. Under international accounting rules, these rights are not considered services performed in whichever country is hosting the tournament. Instead, the balance of payments framework classifies this revenue as exported output. It is categorized as charges for the use of intellectual property. Because the rights are legally centralized in Switzerland, the total value they generate is recorded as Swiss domestic production. By treating broadcasting rights as IP exports, macroeconomics views these organizations not as event planners, but as major domestic producers of intangible assets. This raises a contradiction. If these organizations are nonprofits that distribute their earnings, why doesn't the money leaving the country offset the money coming in? The answer lies in how national accounts are required to split outflows into 2 distinct categories. Path 1 consists of operational costs directly related to the competition, as well as payouts to participating teams. These expenses, classified as intermediate consumption, are subtracted from gross output, actively lowering the total value added to the economy. But Path 2 represents billions in solidarity payments, like UEFA's hat trick or FIFA's forward programs, funding global football infrastructure. This categorization reveals a discrepancy. Solidarity payments require no direct service counterpart from the national associations. Without a service rendered, these billions are classified as current transfers. They do not lower the total gross value added. Because these multi-billion-dollar solidarity transfers are not counted as intermediate consumption, the gross value added remains high, generating the massive peaks in the national data. We can see this mechanic in action by comparing the financial data of 2 different mega events. This table compares the 2018 World Cup against Euro 2016. The World Cup generated $5.35 billion in revenue versus Euro 2016's $1.91 billion. Crucially, the World Cup used only 34% of its revenue for intermediate costs, against Euro's 44.2%. The 2018 World Cup had a significantly more pronounced impact on Swiss GDP. It wasn't just the higher revenue, it was the fact that a smaller share of that revenue was categorized as intermediate consumption. Mathematically, these flows behave in a way that is identical to a multinational enterprise. State statisticians must treat the IOC and FIFA exactly like massive technology or pharmaceutical companies, entities that centralize high-value intangible assets to record immense local production, then transfer that income globally. Strict adherence to these national account classifications provides an accurate record of IP exports and transfers, but it obscures the performance of the domestic Swiss economy. Traditional seasonal adjustment methods cannot filter out these massive four-year anomalies. To see the actual economic health of the country, the State Secretariat for Economic Affairs had to create an entirely separate macroeconomic metric. They developed a sports event adjusted series. This smoothed metric isolates the value added by mega events and spreads it evenly over the four-year cycle. This is the only way analysts can accurately calculate domestic productivity and base real-world economic policy on the actual situation in Switzerland. Understanding the Swiss economy requires navigating these specific accounting frameworks, identifying where intangible assets are recorded and how those billions actually move.